Welcome back, everybody. Having looked through the personal taxes, we're now going to look at some business tax changes and some of the lesser referred to but quite significant changes and curbing of reliefs. So, the business taxes. Main changes here: reiteration of commitment to the 12.5% corporation tax rate, some incentives introduced for job creation, although not clear yet how some of these will work. And I'll just make a general point here that a lot of the business tax changes are likely to be introduced in greater detail and perhaps in greater number in the Finance Act, unlike, say, personal tax changes, which are heavily skewed towards the budget itself. Some additional compliance burdens introduced for business, however, on the negative side, and also some of the curtailment of the tax reliefs will impact on business owners as well as investors, and we look at those in some detail. So the main business tax changes. In spite of recent speculation during the talks of the European Union and the International Monetary Fund, he is again committed to leaving it unchanged at 12.5%. The corporation tax relief that was introduced in 2009 and extended into 2010 for new startup companies starting up a new trade, that's been extended into 2011. But it will now be linked to job creation. So your corporation tax bill of up to €40,000 will only be forgiven based on jobs created, up to €5,000 for each employee that you engage, or each new job that you create, worth of employer's PRSI. The employer PRSI exemption scheme for employees who are taken off the dole has been extended for another year. The new BES scheme, this has been overhauled again. It was overhauled a couple of years ago with the reliefs made more generous, but now it's going to be, and we will look out in the finance bill for this, an overhaul of the scheme itself. But some of the headline changes introduced yesterday, the maximum a company can raise is now €10 million instead of 2 million prior to this, but the maximum is 2.5 in 1 year. Now, the scheme is run out in 2013, so it'll be interesting to see how a company can raise 10 million if there's only 3 years left in the scheme and they can only get 2.5 each year. But as I said, the finance bill no doubt will clarify a lot of this. It's worth noting at this point that it is of interest to somebody who might be looking at a BES that the maximum that they can raise has been increased dramatically, and in the current environment with the difficulty in raising bank finance, this is welcome. For anyone who is interested in BES, please be aware the conditions are quite complex, but indeed the reliefs are quite complex and can be worth looking into in some detail. You'd want to engage in a fairly detailed feasibility study before bringing it to market. If you're interested, of course, give us a call or an email there at tax@newmarket.ie and we'll be delighted to talk to you about. Looking then at some of the other changes, there's a skills development and internship programme that's to provide 5,000 places. Rather than announcing that employers will have to contribute 38 million to it, no real details given, but doubtless in the forthcoming finance bill and related legislation we will get more information. Subcontractor withholding tax is being introduced. Now this is being plugged as an incentive that it's only going to be 20% for compliant taxpayers, but as a matter of fact, up to now, if you had a C2, you didn't get hit with this deduction at all. From now on in, you'll have a 20% charge, and if you're non-compliant, 35%. Following certain campaigns by certain well-known business people, the air travel tax is being reduced to €3 from the 1st of March, but the Minister did emphasise this is a temporary move, and if the airline industry does not respond positively and pass it on to the consumer, they will reintroduce it to its current levels of, I think, €10, or indeed €5 for short-haul flights, but it's €3 from the 1st of March. Now, moving away from business tax directly and looking at the curtailment of some of the reliefs. Pension reliefs have been reduced. That was well flagged in advance. Significant reduction in property reliefs, not really flagged in advance, and we look at those. There's been a significant reduction in the cash thresholds and a radical reform of stamp duty, which is a little bit unexpected. Looking at the pension relief, the tax-free pension lump sum, typically this is 25% of your fund on retirement if you're self-employed, or if you have an occupational scheme, it can be maybe something like 1.5 times final salary. From now on in, if that magic number is more than €200,000, you'll only get the first 200,000 tax-free. The balance will be taxed, 20% up to 575, and then the marginal rate thereafter. The employee contribution then to an occupational pension scheme, up to now, as well as getting income tax relief, you can also get PRSI and health levy relief. From now on in, you will not get such relief from PRSI, and you will have to pay the universal social charge. And also, employers will have to pay employers' PRSI at half the prevailing rate, typically 10.75, on the employee contribution, which currently that escapes that employer PRSI charge. Also, the maximum amount of earnings in respect of which you can make your annual contribution as an employee to a scheme has been cut from 150,000 to 115,000. That was flagged in the 4-year plan. But interestingly, it kicks in for any contributions made from 1 January 2011. So even contributions you make before the tax filing deadline next November, which you can backdate against 2010, the new cap rules will actually apply to those because they'll be made in 2011. So you might want to look at making your contributions for 2010 now. The maximum value of a pension fund in retirement has been cut drastically from 5.4 down to 2.3 million euro. And also, for those who've already retired and have an ARF, you may be used to over the past couple of years having to effectively take 3% of the ARF's assets every year because you're going to pay a tax charge of 41% on it anyway. That 3% has now been increased to 5%. Tied in with retirement is the ex gratia payment or golden handshake, capped at €200,000 with effect from 1 January 2011. Balance will be taxed at the marginal rate. Looking at the property release, these curtailments weren't as widely flagged. Effectively, we're seeing existing Section 23 and tax schemes now being tackled. With effect from 2011, Section 23 type relief can only be offset against that property itself. And bear in mind, most Section 23s, or indeed most residential property purchased in recent years, doesn't throw up a rental profit because the interest and expenses will more than match the rental income. You might think, well, I'll be still able to use it against some of my older Section 23s that I bought maybe back in the mid-90s when property prices were lower. But again, the Minister says, no, you cannot use Section 23 after the 10-year minimum holding period, so that clobbers that. Also, if you sell your Section 23 within the 10-year period, you still get your clawback of relief, but the person who buys it won't get the relief, which is a change from the current situation. So effectively, it's being not alone are there no Section 23s now available or being approved new to the market, some of the existing relief is effectively being phased. Also, on capital allowances on certain schemes, such as the hotels and hospitals, you can no longer carry them forward beyond their investment period of 7 or 10 years. And if you have one of those 13-year products, they're effectively going to tell you we're going to reduce the relief by 20% and you have to claim them over 7 years. But also from 2011, the allowances on these can only be offset against the property in respect to which the allowances arise and can't be set off against the other income. Now, for most hotels and hospitals, there is no actual rental profit from them. You're simply getting the tax relief, and typically they throw up a 0 case 5 gain. So are we now saying that actually that those reliefs are not worth anything? Also, from 2014, a general guillotine provision, any unused Section 23 or capital allowances carried forward will be lost. We move away from that for a minute and look at the old reliables and stealth charges. Petrol is up by 4 cents per litre, diesel is up by 2 cents. No increase though on cigarettes and alcohol. The third level student fee has gone up as expected by €500 to 2,000, although it will only impact, if you have more than one child in college, it will only impact on one child. And the grant is cut by 4%. The internet betting tax is to be applied now as well in the same way as it is to normal betting shops, and dirt has gone up by 2% to 27%, or 30% on some of the wrapper products. Overhaul of stamp duty. There's some speculation here, but nothing of this dramatic nature. Effectively, residential property now, 1% stamp duty on anything up to €1 million. If it's worth more than that, 2%. But all of the residential property reliefs on stamp duty have been abolished. So first-time buyers, new dwelling house, consanguinity, etc., all gone. So it's a more straightforward regime now. In the area of capital acquisitions taxes, gift and inheritance tax, 20% reduction in all of the bands. So parent to child now, the exemption has gone down from 414,000 to 331,000. A summary then on the curtailment of reliefs. Some of the Section 23 capital allowance schemes effectively rendered worthless or certainly worth less going forward. Pensions, we're seeing a reduction in the incentives there, and it's promised that coming forward from 2012 there'll be further curbs here and that you'll only get relief at the standard rate of tax and contributions, for example. Stamp duty moving towards a more straightforward, benign system with less discrimination between purchasers and property types, although no doubt some people who've been hit with heavy duty over the last couple of years will be resentful. And then the CAT thresholds is the start of a more radical overhaul of capital tax reliefs. Looking at some planning points, instead of waiting until November 2011 to make your pension contribution, consider making it now. Availing of Section 23 reliefs before December 2010 by taking your rental income from the company now and using it up instead of in future where you might not be able to. If you can persuade the bank to do this, you can pay off mortgage on your Section 23 so that the profit arises on those and not on some of your other properties. Leave the mortgages on the other properties. And accelerate rental income now if you can instead of taking wages in order to use up your reliefs. Putative overhaul of capital taxes. They're talking about in the 4-year plan about curbing CAT, CGT and stamp reliefs significantly from 2012. Perhaps retirement relief, business relief, stamp duty for young farmers and transfer of site. So perhaps now is the time to add things such as, for example, transferring your business to the next generation, selling your business, transferring farm assets. The next 12 months could be the time to plan and act. Good and detailed advice should be taken now. So in summary, there's pain for everyone. Yes, the headline changes stand out, but look at the devil in the detail and look at the drastic changes in particularly the curbing of reliefs. And more pain is promised, so planning is advised, I think. If you want to talk to us about that, our details are there. Email us, call us, see us online. Thank you. thank you very much for listening and taking the time to go through our presentation.